What's up, everybody? It's Hey John. I jabber opportunities nonstop, and today we'll be discussing unemployment. We will be discussing the debt ceiling, and of course, we will be talking about cryptocurrency as well. Initial jobless claims today. It is claimed to be 362,000 jobless claims initially, and it is supposed to be estimated around 330. And folks, just to put some perspective on this, 360K is almost double the unemployment we had prior to the pandemic. Normally speaking, we would see a crash in the stock market if this happened on anything but pandemic here. But people are so accustomed to these 360, 700,000 jobless claims, it doesn't phase anymore. Now we're going from 900, 700 to 360K, and we're saying, wow, this is great news. We are decreasing our jobless claims, which is absolutely true. It is decreasing, but decreasing from the all-time high during the pandemic here. Pre-pandemic, we were around 180, right? And now we're seeing, holy cow, 360,000. I'm telling you folks right now, if this happened on a more normal time, this would destroy the stock market, and cryptocurrency would go soaring. The reason why is because cryptocurrency is seen as a hedge against the stock market. However, though, more recently, this year, for the first time, we're seeing real institutional money flow into Bitcoin, Ethereum, etc. So now we're seeing some intermingling of the old guard with the new guard being cryptocurrency, the old guard being stocks, bonds, etc. All the boomer stuff. Cryptocurrency, I would say, is more new generation, but there are a few boomers in it as well, which is fine. I have no problem with that. I'm not being discriminatory when I say that. I'm just saying, all I'm saying is that the demographic in cryptocurrency is, generally speaking, a younger age bracket. Also to note here is that we're also seeing, guess what? The debt ceiling has been raised, and our beloved government has voted it in. Wow. Surprise, surprise, right? We have this almost every year or every so many quarters. We need a new debt ceiling, and they voted in, and there's this whole debate, oh, should we increase it or not? And they almost always increase it. So, okay. I don't even know why we have that anymore. It's almost like a joke if you ask me. But moving back to unemployment here and inflation, we're seeing the CPI numbers also increase as well. And the reason why we have inflation or CPI, I would say, to be frank with you guys and gals, is that it's a government-induced issue here. Why do I say that? It's because they are printing all this free money. They were giving it away hand over fist to any business during the pandemic, saying, hey, if you've been hurt, you don't need to prove anything. Just tell me you need the money, and I will send you this many funds here. Right? And you're seeing tons of fraud and abuse here. You're seeing large corporations, you're seeing rich celebrities pulling in that money because they have a business, right? And they were affected. But what is the definition of affected, right? It's very vague. So you're seeing these fat cats steal all of this money here, and now they're buying Rarries, Lambos, houses, right? But guess who pays for it though? Who pays for this free money being printed out? You and I, not the fat cats, because they don't pay taxes. Corporations, we all know they don't pay taxes, right? Maybe 0% they pay, or almost like 1%, almost nothing, right? So let's be real here. We're the ones paying these fat cats to get their free houses and their free Lambos and free Rarries. But yet we're holding the bags here. And what did we get as a U.S. citizen? Well, we got a $1,200 stimulus check, while these businesses got tens and hundreds and millions of thousands of dollars here. But we got, like, say, if someone got $1 million because of a certain size of a corporation and you got $1,200, you got 0.001% of the pie. It's almost like a joke if you think about it. It almost feels like a very sad prize that needed to be given, or you would see even more riots. And guess what? We saw tons of riots and upheaval during that time because of the unfairness, of the racism, and all kinds of stuff going on in America here, right? But more importantly, the economic divide between the middle class, the poor, and the rich, it has expanded exponentially. I can tell you right now, people making six figures, I know these folks in my own personal lives, they feel like they're making minimum wage. They are barely scraping by. I'm not saying, oh my God, I feel bad for these people. All I'm saying is that if you make six figures nowadays, it's pretty much like minimum wage. You aren't living the good life. You aren't going on all these vacations. You aren't doing all this stuff here. But of course, it depends on where you live. If you live anywhere where they can support the six figures, like in the San Francisco area, LA, New York, anywhere that can support these salaries, well, guess what? Your salary is being eaten alive by the cost of living. And since the government has decided to give all of this free money in forms of, stimulus for the people, business money here, and of course, unemployment being expanded and giving bonuses for them, everyone had free money to spend to some degree here. And guess what? Everybody wanted to buy stuff because, hey, if I get free money, I think I should spend it to stimulate the economy. And that's what they did. And that's kind of why we're seeing the stock market having all these all-time highs here. Oh my God, Target, Walmart, whatever's. We are seeing great sales numbers. But we all know it's common sense. It's correlated with the free money being issued out through a form of stimulus and unemployment. Now that it is drying up, now they're saying, hey, on our forecast, we may see a more rocky Q4 2021, a rocky Q1, Q2 2022. We may see more inflationary now due to supply constraints. The reason why there are supply constraints is because these companies decided, you know what, we're heading into a rocky time and people probably won't have money. So let's pause on our buying here so we don't have to overstock our inventory and then give clearance sales and lose a lot of money here. So they decide to buy lesser on purpose. And now they're seeing, oh my God, we need to buy more, but we can't because everyone else is trying to buy more at the same time and there's no supply. And we do live in a just-in-time logistics time here. Just-in-time means that you order only enough for literally the shelf life. So your shelf has maybe a week's supply. You order enough for a week's supply the following week here. And if you estimate you're going to have a lower sales, you're going to order lesser as well. So it's kind of a domino effect because you don't just create all of this stuff in a second or a snap. But if you print money in America, it gets created like that instantly. So when you create money instantly like that, and when you need to make products, and making products don't happen like this. It takes time to make these products. So therefore, you're increasing the money supply. It obviously overshadows the products you have to sell because if you can create something instantly to buy something that takes time to make, well, guess what? By default, you're gonna have more dollars chasing fewer products. That's how it really works. And that's kind of why I believe that it is time to hunker down because we're seeing eviction moratoriums end. In LA, it's ending in another month or so. We're seeing commercial real estate starting to have their own landlords saying, hey, you know what, guys? It's time to pay the piper. And you have to ask yourself, how many of these commercial real estate folks in these businesses, right? How can they afford to pay their bill? When I drive around my city of LA, I'm seeing so many mom and pop shops closed, gone, vamoose. But yet these commercial real estate, I don't see any for sales. I don't see any for closures yet though. But it's coming, folks. It is coming. And we're going to see a commercial real estate crisis because folks are working from home now. Mom and pops have been destroyed, obliterated, literally, because they couldn't get the help they needed during the free money for businesses. But all of these other rich people basically got it. And the folks who needed the most, the mom and pop businesses, they didn't get it. So now they're closing up. And now you have all this commercial real estate just hanging around everywhere here. And I see a tsunami here of terrible proportions. So it is time to hunker down, folks. It is not the time to go out to go, eat out every single day. It isn't the time to go to Starbucks every single day. It is time to hunker down and be a little wiser with your money because opportunities are coming. Yes, you can invest in stocks. Yes, you can invest in crypto. I do like crypto. But what I like more than crypto and more than stocks are real assets. For example, by real assets, I mean real estate, commercial real estate, gold, silver. To me, That to me is way more tangible than stocks or crypto. I'm not saying stocks or crypto are bad. You should have it for sure. What I'm saying is that I like things I can touch. I'm that kind of a person. I like things that I can touch tactilely. So for me, that's where the real money is. And I see it coming, folks. So if you want to stack your bucks, if you want to stack your silver, if you want to stack your crypto, maybe you should. And when this crash comes, you will benefit immensely and you can retire sooner than you think. But that's only if you are having the fun to do it. In order to have the fun to do it, you need to be a little more prudent with your money. That's what I encourage you folks to do. It's not financial advice. It is what I'm doing here. I'm stacking my monies and my cryptos, and I want to benefit from this fall and this collapse of epic proportions. And it's coming, folks, and I will be covering it. So it's your boy, Hey John. I thank you for joining me today to watch this video here. If you're a new viewer, please subscribe and like. If you're a returning viewer, please like, because you know why. YouTube likes it. And most importantly, have an awesome day, and I'll catch you on the next one.